Hi. The way I see it is that if you really want to examine the oil price and perhaps place a trade on it, you cannot ignore the here and now. What you do is, and what my recommendation would be, that you look at it on a daily basis and then compare what daily levels you've noted against a cutoff point, say any cutoff point on a 5-day cycle, preferably a Friday.
In terms of trading, any tips, particularly, mistakes, common mistakes that you should avoid, do you think?
I think one of the biggest mistakes that people make is they tend to follow a herd mentality. If the next guy is shorting, I should short. If the next guy is going long, I should go long. The volatile times that we are in, I think you yourself should be the best judge. All right. If you have a gut instinct that the next guy is shorting and you ought to do it, then do it. But don't just short because somebody else is shorting. Now, don't follow the herd mentality. That is. I think that's relevant to a large extent, to the wider market, not just the oil market, but the wider commodities market. If you look at the commodities market as a whole, going beyond oil, people are largely bearish on it. And we mentioned hedge funds earlier. They made some pretty spectacular wrong calls in the summer, and they took quite a few traders along with them because people thought, well, hang on a minute, the hedge funds are net long on their betting stakes. Maybe we should go net long as well. Whereas their gut instinct told them there's a lot of oil out there. Why am I really doing this? So that was a moment of introspection. You need to look back at yourself, look at your strategy, and don't follow a herd mentality. And now, fast forward 6 months, you look at the hedge funds, they're bearish not just on oil. Some of the biggest names in the hedge fund industry are not just bearish on oil, but they're bearish on commodities as a whole.